What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the craziness and the madness that we saw today in the markets with AMC Entertainment and GameStop Corporation. Let's go ahead and talk about that, guys. And the markets did pretty well today, guys, arguably. Russell 2000 broke even, NASDAQ went up 1.31%, Dow Jones went up 0.27%, and the S&P 500 went up 0.71%. Oil went down almost 10%. The news that we are having once again lockdowns in China, even in the capital city of Shanghai because of the resurgence of COVID-19 cases over there. Gold went down today 1.79%, and silver went down today 2.42%. The 10-year Treasury yield went down today 0.60%, and the VIX, the volatility index, went down today 5%, and it closed today's trading session below 20 points, a critical technical area for the VIX, because that implies that below 20 points, most of the call options out there are more expensive than the puts. So whenever you guys see the VIX trading below 20 points, that implies that most of the call options are expensive relative to the put options. And when the opposite happens, when the VIX is above 20 points, that implies that most of the options or most of the put options are more expensive relative to the call options that are available to be bought. So, can we trust the rally that we are seeing as of now, guys? This is the $10,000 question, or the $1 million question. And you guys know that I am a bull. I am bullish on this market. But I don't trust the rally that we are seeing as of now. I think that we have gone too far, too fast. And guys, if we do the math, we have an unbelievable amount of bad news on the table. And the markets are rallying. And they actually rallied today on basically no good news at all. So, take this into account. Today we had bad news coming out from China. So they are locking down once again a bunch of cities, and they are even locking down Shanghai, the capital city of China. Tesla actually announced that they are shutting down their gigafactory in Shanghai for 4 days. And that's a reason, the only good news that we can point out that, let's say, happened that occurred because of the lockdowns in China was the fact that oil went down today 10%. However, oil is still above $100, very expensive, obviously. So we have lockdowns in China, the second economy of the world. That isn't good news. We don't have any specific good news when it comes to the war in Ukraine at all. As of now, we have Russians and Ukrainians holding negotiations in Turkey until Wednesday, but so far we haven't got any specific good news about the war. And we listened to President Biden on Saturday in Poland saying something that he shouldn't have said, that Vladimir Putin can no longer remain in power. So that's obviously bad news, because that exacerbates the negative narrative when it comes to the war in Ukraine. And inflation is running hot as of now, guys. As I just told you, we'll still have crude oil above $100, which is very bad news when it comes to inflation. And keep in mind that on April 12th, we are going to have the CPI data report of March, which is very likely to come out very overheated on Friday. On top of that, guys, on Friday, we're going to have the jobs report of March. Keep in mind that last Thursday, we had the best jobless claims report in 50 years, or the lowest figure when it comes to jobless claims in 50 years. That implies that the jobs report of Friday is going to come out very strong, confirming what the Federal Reserve has been saying left and right, that the labor market is very strong as of now, and that implies that the Fed has, the possibility of being very aggressive when it comes to hiking interest rates. And on top of that, think about something, guys, because in 2020, the markets rallied, and a lot. We saw all-time highs in all of the indices before we even got a vaccine. However, way back then, we had the Federal Reserve backing up the markets, guys, via quantitative easing, and quantitative easing is gone, guys. So we no longer have the liquidity that the Federal Reserve was providing to the financial markets until 2 months ago. So what are we going up so much, so fast? This rally makes no sense, at least from what I see it. And we have to be very, but very careful. I am not going to say, guys, that we are about to see a debacle of the markets. I am not even going to say that we are going to revisit the lows of late February. However, I can see a leg down over here, maybe down to 4,300, 4,250 maybe in the S&P 500. Why not? But what I cannot wrap my hand around is the markets keep on going higher and higher, needless to say, hitting all-time highs on no good news at all. So be careful, guys, and keep cash in hand. When it comes to the sectors, today we didn't have a broad rally, guys. We had a tech-oriented rally. I am going to show you in just a second the advances and declines distribution. And today, the best performing sector by a long shot was consumer discretionary. It went up 2.67%, basically because of Tesla. Tesla let us know that they might be carrying out a new stock split, and the shareholders of Tesla are going to have to vote on that matter. My vote is going to be no. It is absolutely unnecessary for Tesla to carry out a new stock split as of now. And the third best performing sector today was technology, which went up 1.19%. The financial sector, the second most important sector of the market, went down today 0.28%, and obviously energy went down today 2.48% because of the news that came out from China. They are once again locking down cities and stuff like that. So obviously that implies that we are going to see a decrease when it comes, at least in the short term, when it comes to the demand of oil. If we take a look at the advances and declines distribution, check this out, guys. We had a green day when it comes to the 4 major indices. However, today we had a greater amount of stocks going down relative to the amount of stocks that went up. So today we had 4,095 stocks going down and 3,527 stocks going up. So we didn't have a healthy rally today. It wasn't a broad rally, the one that we saw today in the markets. That is a bit concerning. That implies that there is some sort of weakness out there when it comes to the markets. Let me show you now the trades that I closed in today's trading session, and I have been taking trades on Coinbase left and right, guys. I made $700 last Friday, and today I was also able to make $713. So check this out, guys. Last Friday, after I closed the position that I just told you, I opened a new position in Coinbase. I purchased 50 shares at $186.19 because, as I just told you, I closed one trade on Friday on Coinbase, making $700. So I closed that trade on Friday as soon as the trading session opened. And as soon as the trading session opened, Coinbase retraced, and it pretty much revisited the price, the average cost that I had on the position that I closed as soon as the trading session opened. So I decided to open a new position. So I purchased 50 shares at $186.19, paying $9,309. And on Friday as well, I purchased 20 more shares at $184.90, and I paid $3,697. I ended up investing over here $13,000. And today I decided to close this position, and I was paid $13,510. I ended up making over here $530, guys. And after I closed this position, Coinbase retraced a bit, and I started a new position, a day trade. So I purchased later on today, after I closed this position, 50 more shares at $196.59, paying $9,829, and I closed this position an hour before the markets closed. So I sold these 50 shares at $200.25, and I was paid $10,012. I ended up making over here $183. So I ended up, long story short, making today $700. A very productive day when it comes to trading for me. S&P 500 goes up today 0.71%, and it closed today's trading session at 4,575 points. So the bulls have taken on all the major moving averages, guys. 50 SMA, 180 SMA, 200-day moving average, and 100-day moving average. So the next gap that the bulls need to fill would be up to 4,600 points. This might be, in theory, guys, a tough one. And why? Well, because at 4,600, the bulls were rejected on 2 occasions in February. This was a double top. And after this double top was confirmed or finally unfolded, we saw a sizable drop in the S&P 500. So needless to say, I'm thinking that 4,600 is going to be a very tough spot for the bulls of the S&P. Since the RSI of the S&P is at 72 points, guys, the most healthy or the healthiest scenario for the bulls of the S&P would be starting to consolidate either above the 100-day moving average at 4,542 points, or even better, guys, above the 200-day moving average at 4,475 points. I would like to see a process of consolidation, maybe the S&P 500 trading sideways for 2 or 3 trading sessions at above either the 100-day moving average, as I just said, or maybe the 200-day moving average, because that is going to be healthy. That is going to allow the RSI of the S&P to cool off a bit so the bulls can gather momentum, and then they can try to go higher without the S&P being in an overbought condition. When it comes to the bears, the most immediate task that they would need to carry out would be taking on the 200-day moving average at 4,465 points. And when it comes to the NDX, the NASDAQ 100, get these, guys. The NASDAQ 100 went up today 1.58%, and it closed today's trading session slightly above a fat number, guys, a very important fat number, 15,000 points. So the NDX closed at 14,987 points. The next important gap that the bulls need to fill over here is going to be up to 15,100 points, 200-day moving average on the 4-hour chart. Can the bulls fill this gap right away? They can, because the RSI of the NDX is at 72 points. It is starting to get a bit overheated. We can make the case that we still have gas in the tank over here. We can make the case, if we want to give something to the bears, that maybe we might see a death cross unfolding anytime soon in the NASDAQ 100, because as you guys can see over here, this 100-day moving average might be potentially crossing below the 200-day moving average anytime soon. That obviously is going to be bearish. When it comes to the bears, the most important task that they need to carry out would be taking on 14,650 points. We are talking about a former area of resistance back from late January, and also a previous area of support back from mid-October. So let's see what happens over here. If you ask me, and since I am a bull, I don't like to see the indices getting overheated, a retracement, guys, down to 14,600 points, and maybe a process of consolidation slightly above that level would be very healthy for the NASDAQ 100. And the first stock of this video, it's going to be Marathon Digital. And obviously, guys, you guys already know that Bitcoin has been on an absolute tear. Unstoppable, apparently. I have been doing some research work here and there. Apparently, Luna has been buying a lot of Bitcoin because they need Bitcoin in order to back up their stable coin. So that might be the reason why Bitcoin has been on a tear lately, and obviously Marathon Digital is a company that mines Bitcoin. So the higher Bitcoin goes, Mira will follow. Okay, Marathon Digital goes up today 8.24%, and it closed today's trading session at $31.27. Guys, watch out for Meta. Watch out for Meta. As of now, The stock of this company is slightly below a critical technical area, 32 points. We are talking about a former area of resistance back from mid-February. And we are also talking about a former area of support back from mid-December and also back from September of last year. So I'm thinking that if the bulls can take on 32 bucks, take a look at the RSI, 62 points, very healthy from a technical standpoint, they are going to be able to fill the next gap up to the 100-day moving average at $35, from $32.20-ish up to 35 bucks. We're looking at a 9% profit trade, nothing to sneeze at. And mind you, we can also make a bear case over here because we, and as I just said in the case of the NDX, we're about to see, or we are actually already seeing a death cross over here. You guys can see how this 100-day moving average just crossed below the 200-day moving average. This is obviously a bearish sign. However, if Bitcoin fills its gap up to 50,000 bucks, guys, obviously, and since Mera pretty much mirrors whatever Bitcoin does, this death cross is going to be invalidated, and we're very likely to see Marathon Digital at 35 bucks anytime soon. And the second stock of this video is going to be a penny stock, guys. You guys know that I don't like to talk about penny stocks here on the channel. Nile Holdings. But however, in the case of Nile, which is the ticker symbol NINILE, I like this technical setup, guys. I might start a speculative trade over here. So the stock of this company goes up today 14.46%, and it closed today's trading session at 94 cents. Jesus. Okay, watch out for 90 cents, guys. I think that this is an interesting spot if the bulls can hold 90 cents as support. 90 cents happens to be a previous area of support back from mid-February, and it is also a previous area of resistance back from late January. So as of now, Nile is trading above the 180 SMA and the 50 SMA on the 4-hour chart, which is obviously a good sign. So I'm thinking that if the bulls can gather momentum slightly above 90 cents, that might be a sign that they are about to fill the next important gap up to the 100-day moving average at $1.22. The RSI of Nile is at 66 points, so I think that this gap might be filled because we still have gas in the tank over here. So from 91 cents ish up to $1.22. Get these, guys, 24% profit trade. And mind you, this is a very risky trade. This is a trade that if we happen to start, we need to place a very tight stop loss, because if this support of 90 cents happens to be broken to the downside, I think that there is room down to the 50 SMA on the 4-hour chart at 70 cents or maybe 50 cents. So be careful, guys. This is a very risky trade over here. AMC Entertainment, the talk of the town in today's trading session, goes up 44%. Jesus Christ. And it closed today's trading session at $29.33. 33 cents. I told you, guys, if you remember, in the video that we posted last week on Thursday, I told you I can see AMC going up to $25 or $30, no problem, with good momentum, and that is exactly what happened today. So we got good news, or arguably, because the CEO of AMC said today that they will embark on more meme stock powered deals. Wow, I mean, you gotta have a face over here, right? So CEO Adam Aaron said the company would capitalize on the interest of its retail investors, utilizing the $1.8 billion war chest raised through shareholders in 2021 to invest in more transformational deals like Highcroft is the name of this company. I think that this is the gold mining company that they recently acquired. So he told this to Reuters, and retail investors seemed to like the news, guys. And that this is the reason why AMC supposedly went on an absolute tear today. Mind you, guys, we saw a very acceptable spike when it comes to the volume of AMC. AMC usually trades with a volume of 48 million shares per trading session, and today AMC traded with a total volume of 219 million shares. So 219 million shares exchanged hands today relative to 44 million shares, which is the average. So we saw a very interesting spike when it comes to the volume of AMC, and the short float or the short interest is still being elevated, guys. It is at 20 points. However, now the question is, can AMC keep on going higher? Because it was rejected today at 30 points, and the RSI of the stock of this company is at 85 points, extremely elevated. So I'm thinking, guys, that if we happen to see a retracement, which should be the case from a technical standpoint, I am thinking about two possible spots in which AMC Entertainment is likely to come across with buyers. 26 bucks, we are talking about a former area of support back from early December, and if this support happens to be broken to the downside, then we are talking about 23 bucks, a previous area of resistance back from early January. So watch out for AMC here, guys. This could be a quick trade, a trade that we have to take place in a very tight stop loss, because from 23 bucks up to 26 bucks, the other area of potential support that I just told you guys about, we are talking about a 13% profit. And from 26 bucks up to the spot in which the bulls of AMC fell today at 30 bucks, we are looking at a 13% profit. Nothing to sneeze at, no doubt about it. And in the case, sorry guys, of GameStop. So what happened over here? GameStop went up today 24%, and it closed today's trading session at $189.59. And as I just said in the case of AMC, guys, GameStop is very overbought as of now. You guys can see its RSI sitting at 83 points. So obviously, GameStop is also due for a pullback, as I just said in the case of GameStop, and as I just said in the case of AMC. Sorry, guys. And in the case of GameStop, we also saw a very interesting spike when it comes to its volume, guys. The average trading volume for GameStop per trading session is at around 4 million shares. And today, 15 million shares exchanged hands. So yeah, that's a very decent and respectable spike when it comes to volume. Can we take a trade over here on GameStop at $100, almost $90 with its RSI sitting at 82 points? No fucking way, guys. I am going to keep a close watch on GameStop. However, I need to see a retracement down to 150 bucks. This is a previous area of support back from mid-August and also back from early July. I think that if we happen to see a quick drop of GameStop down to 150 bucks, this is a spot in which the stock of this company is likely to come across with buyers. From 150 bucks up to the 200-day moving average near $165, we are looking at an 8% profit trade. So watch out for both, guys, GameStop and AMC, because it looks like the fun is back when it comes to most of the meme stocks out there. And with GameStop Corporation, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses. It is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.